Hello traders, hello everyone, my name is Greo Horat and welcome to our new video for end of the week. So finally we have seen some volatility, especially since Wednesday when actually Fed has announced long-awaited tapering. So we are seeing some dollar strength, and on the other hand, you have some central banks that are not really that hawkish. I mean, Bank of England disappointed, didn't deliver what investors were looking for, and also you have still this ECB policy decision that keeps the euro very weak, especially since last Thursday. So you have divergence between these central banks, and that's what could actually can actually define the further direction for those particular currencies. So on euro dollar, we've been looking to the downside, and I highlighted at the start of the week, even posted on Twitter here, that I'm looking for two resistance levels after this very nice first drop since the ECB press conference. And actually, what was probably the most important for me to look for further weakness on euro was because we had before that we had three waves up, okay, and then you also had this weekly close below that trend line. So that was probably the most important because end of the week prices, especially after very massive volatility, I think that those prices are the most important of the week. So especially if you have this any impulsive price action in Elliott wave terms, that's even better. So looking at the updated charts now, the euro dollar, as I said, is coming to the downside after this free wave rally. You had this broken trend line that has been retested twice after this pullback. So the pullback was in free wave maneuver, which is also perfect Elliott wave corrective subdivision. And as you can see, the market has already moved to a new low here. So the question is, what will happen down there? Especially next week, I think can be very important based on a price action here. Why? Because if I look a little bit back here and check the higher degree time frame charts, you can actually see that euro dollar is coming to a new low. Of course, that means it's bearish because you have lower highs and lower swing lows. So that's definition of a downtrend. But keep in mind that you have prices coming back into this 2020 COVID spike high right in these near-term levels. So that's one thing. And then you have another thing, you have a divergence here on the RSI, very strong one. And then you have potential wedge formation here. Now, wedge formation, it's a pattern that occurs at the very late stages of a trend. So keep in mind that we are currently trading south here since start of the year. So definitely, maybe, not definitely, but we should be aware of potential rally if we consider, as I said, even other aspects of this analysis. As I said, this 2020, this divergence and the wedge formation. So this gives me the impression that we could stabilize here on euro and maybe even rally. Of course, the most important will be that market confirms that we may rally. So looking at the Elliott wave charts here, I actually am tracking two different interpretations. The first one is that we are here in ending diagonal to complete a very complex wave D of a very big triangle. I will not go into details for this one for today. Well, the second wave count shows that we could be here making a very deep free wave pullback for a wave 4, where you have this wave C as an ending diagonal. So as I said, ending diagonal is a very powerful pattern. So let's see if we really can get some price stabilization on euro dollar, because if we suddenly surprise everyone and we rally, then I think it can be very interesting interesting price action forward here on this pair, because not a lot of investors or market participants in general expect any kind of rally on euro dollar. But it's not for me to decide, it's actually confirmation that we need from the market. So let's assume that we get 5 waves up on a smaller degree time frame chart. Well, that's the structures that we are looking for and waiting to confirm that we are on the right track. Until then, euro dollar, it's still bearish. Okay, now very quick one, let's take a look on silver, Now, silver is, in my opinion, quite interesting from a long-term perspective. We rallied away from these 2020 lows till August of the same year, and since then we are just now consolidating. So, consolidation means that market is not really directional. Okay, it's just moving sideways for the last 14 months or so. So longer, or is this sideways price action more powerful, can be a breakout? So the question is, in which direction the breakout can be? Well, you are definitely here at very important support when looking back at the previous swing highs, and you had also an impulsive rise from that new low, while you have this current movement looks like a correction. So I think that there is a very big potential here. Of course, it's very hard to say where exactly wave B, wave 2 will finish, but based on the latest price actions here, I think that there is room for some upside. We came out of this wedge, we broken it at almost retested it, and now we are trying to turn to the upside. I also have the alternate scenario here where suggest that we can be still in wave 4 of this wedge, but with room for higher prices. So even this one, even if it's bearish, it suggests that we could rally further. And then you have this potential head and shoulders bottom formation. Of course, that's still just observation until you see really confirmation from the market that and prices that market completed this pattern, this bottom formation. In other words, you need to see this broken neckline to make sure that you are on the right track. But I really love this basic technical analysis. Try to do a combination with the Elliott wave principle because it gives me even more confidence into my work. Okay, so let's see what brings next week. I definitely think that this volatility could stay in the game, especially if this divergence between central banks will continue. Have a good day and have a nice weekend. Bye.